We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. No matter how you invest, whether it's technical, macro-based, value-based, growth-based, you are investing with price and how it moves between main support and resistance channels. Now, an important indicator in the markets today is the US dollar. The US dollar is a barometer of how well the money printing is going on between the US and Europe. This is the DXY. And so if Europe is printing more, the dollar goes up. If the US is printing more, the dollar goes down. That's pretty much it. So at the moment, the US dollar is between these support and resistance channels. Okay. And this is the middle range. And as we can see here, we've had resistance in the middle range here. And we are undergoing resistance here at the middle range. A bullish scenario, which I favour, is a move down to the lower range. The US dollar falling is fuel for risk on assets. So it represents money printing. It represents fiscal spending greater than the other guy, which is obviously Europe. Now, for the US dollar to go down like that, it's when will the ammos be spent? We also know about the US midterms next year. It's now July, so we've got about 15 months, 16 months. So the ammo to keep the markets up has to be carefully used to time with the midterms. Because if you're a Democrat and the Fed's packed with Democrats and you want to have a good midterms against the Republican onslaught with the audits and what have you, you want to use your ammo to keep the stock market up. The last thing you want is a risk-off asset move down, nor does the Fed want. I mean, you don't want a landslide for the Republicans, which is largely fueled by a slumping stock market. So I believe the US dollar is going to be tanked, if not by design, by the fact that more money printing will happen in the US, and over the next 12 months we're going to see a US dollar lower. So let's work with that thesis, and let's have a look at the other channels and where they move. And obviously if I'm wrong and the US dollar goes up to 95 and creeps around there, well the slump has already started, and you can add a suffering stock market and poor retirement portfolios to the Democrat worries of getting elected into US midterms next year. So let's bet on the bullish scenario where the US dollar either tracks sideways, which is between 93 and 89, or even lower. Okay. So that channel looks quite nice. As you can see here, it's very channel orientated, very cycle orientated. I believe the cycle is down. I've showed you it in my blog. You go and check out readtheticker.com blog and you'll see the cycle for the US dollar, and it's down for the next couple of months with a big bottom due, the next 3 or 6, 9 months. Okay, so that's our thesis, weaker US dollar. So let's have a look at some stocks. Now we go to the largest stock market, the NYSE. As we can see here, the blue channel is the most recent one, the red one is the long-term one. If we get an excited stock market, NYSE could actually creep up to 20,000. There's resistance up there. Who says why? It's the COVID low. Okay. I'm just going to expand my browser magnification to get in there a bit closer. So you can see it on the screen. Oh, wait a minute. Got to shrink the thing. Right. Here we go. So we can see that we've broken the channel here. This has been a major top in the past. That's what everyone fears. But like I said, with the more juice more money printing, lower US dollar. This could trick up the 20,000 if you see that. That's one. That could actually end up being the 5 waves move up here. And that would resemble a blow-off top quite easily if we get that high. And maybe the only way this can go market go down when a Fed controlled market is obviously the Fed makes a mistake. Right, so stocks can move. You look at the NASDAQ because that's the riskier asset class. As we can see here, this is the major top on the channel there. Obviously that's been surpassed. Previous highs there, right? So if it can actually go up to the upper channel, which is somewhere near the 20,000 mark. Let's say 18 to 20,000. That's quite feasible. And a little pause here. There's no reason why we can't have another longer burst. That means growth is going to do better over value because NASDAQ is pretty much growth stocks. And why wouldn't we get a rally that something that looks like this in 1999? You can go full bananas. US dollar goes to 85 or 80. We will get a full bananas rally like that in 1999. And that could do some sort of similar type performance. You can't set price targets when there's energy. I mean, if it's going to move, it's going to move to wherever it goes. So we've had, see how it's been contained to that area there? There's no reason why it can't go higher. Yeah. Yep. But don't bet on that going low anytime soon. So that's stocks. Let's have a look at some risk on. Let's look at Bitcoin, which is anti-US dollar. As you see here, it followed the green channel. And it's now sort of the more mature Bitcoin is following the blue channel. Okay. So we've had a pullback here. After today's action, I'm going to have a closer look. Right, here we go. I believe we're following the red channel up. So here we've got up there. We've just had a bit of a shakeout there. So I'm just going to focus in here a bit. There we go. There we go. As you can see here, that all get bigger, 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 bigger. Come on. Right. You can see the bar there as it penetrated the lower channel line, and all this talk about Bitcoin and Elon Musk and a guy from Twitter, I can't remember, Jack Dorsey, they're having a debate today. Suddenly all the positive news is coming out for Bitcoin and crypto. I mean, apparently Goldman Sachs, Wealthists are going to invest to have a crypto portfolio. So all of a sudden that news was quiet, and now the good news is coming out. It looks like the buying has been done. And in this area here, now they want good news to get their portfolio up. So all that, for example, we had the crypto FUD here. Elon Musk is bad. I mean, guy had 48,000 Bitcoin. You know, he said Bitcoin is bad. China's going to cancel mining again. Well, they have cancelled it. Now all the mining's moving from an unfriendly territory to the US investors. That's China. And now the mining's moving into friendly territories, i.e. out of China. So if you're a fund manager or an institution, you want to invest in Bitcoin, your concerns are, where is the mining? Because obviously you don't want to, if you have a minor war over China and over Taiwan or some sort of rubbish, you don't want the mining going on in China. You want a mining in a more friendly zone, either in the US or just literally outside China. And now the mining's moving out of China, which is, you know, an ongoing situation. I even believe Elon Musk is actually doing some mining himself. So funny that. And so therefore now Elon Musk comes out and says, I've only sold 5,000 Bitcoin, so he's got about 42,000 now. So quite frankly, all this here was organised chaos to lower the price to allow accumulation. And if this next couple of weeks, I say by mid-August, that this channel line holds, then that FUD has done its job, accumulation been made. Let's slowly accumulate and wait for the lower dollar, which will send obviously Bitcoin higher. Upper channel, lower channel, sell, buy. Simple as that. Now, a popular, let's have a look at Ethereum. What's Ethereum doing? Because that's obviously a well sought after crypto. Just moving up these channel lines. Tested the lower line here, slight penetration. But a more recent close-up channel shows the true story. Here's Ethereum then, as you can see, channel here. Upper channel, whoops, sorry, wrong one. Upper channel, lower channel, lower channel. As you can see here, demand has come in. Okay, looks pretty good. So I don't know if I don't know the time frame. If we get to the upper channel again, obviously we get to the upper channel again, it's pushing 10,000, which is a lot of people talking about. So if we get, let's have a look. I don't know if I do a time study, which is an equal time study from that rally there to that point there. If we're lucky enough to get the same time frame, that means upper channel over here, if we're really successful, would be around February 2022. All I did was time frame from the rally to there, put on the low, and it ended up being up there about approximately February 2022. Will it be that simple? Who knows? The US dollar falls moderately then aggressively, then quite frankly that is on the table. Right, so we better have a look at silver and gold, because they're anti-US dollar trades. Where are we? Here we are, silver. Once again, it's doing, I believe this is the channel that the trading community are following. We've had, you know, upper range here, lower range, the COVID smash. Because the channel actually started back here, we had this massive interruption. Up point, down point, up point. So I believe silver is bullish, and if I get in close, maybe I can get in close and show it a bit better. See that middle line is support there, looks pretty good. Resistance there. Hopefully we get support here to prove this channel is working. Otherwise we have to adjust it. So silver looks pretty pretty bullish. Okay, let's have a look at gold. Where are we? Go. Where do we hide gold? Oh, there we are. So price action and channels is very important, and here we have gold. We had this supply. Yeah, wrong button. See that supply around that middle resistance line there. It's a middle channel line. We had supply issue here. Supply issue here. Another supply issue there. We have, obviously when you have a demand rally, supply is going to come in at resistance. It's just a normal way of doing things. We've actually had that around there. So if I expand that a bit so we get a bit closer. Just normal reaction. People are calling that the cup and handle, which fair enough. So we had a support here. I mean, it looks quite deliberate, doesn't it? Looks, you couldn't get it more obvious. Demand coming in there. So obviously resistance there. Demand there. Consolidation, typical Wyckoff stuff. Breakout. Supply issue here because we're hitting our resistance. Supply always comes into resistance. That means people who are on the wrong side get on the right side. People who are on the right side are taking profits. People are reaccumulating, ready to go. So nothing wrong with the gold trend. Now I think we might have a look at a close up. Let's have a look at a close up. Yeah, here's a close up here. You can see that There was a trend down, and it's, as you can see, here's our demand point, a supply point of resistance, and we had a breakout here, obviously, and see how these lines actually are zones of patterns. So where these lines happen, this is where where the channel lines happen. These are where the patterns happen, because these are supply points, and as you can see that. So if the US dollar mingles on down, I think obviously the next supply point is going to be up here, which is just under 200. This is on the GLD I'm looking at, right? Which would be 21, 22 on gold futures. Okay, all very normal. Looks very good. Just a little more said, if the price is acting as normal, stay with the trend. It's amazing how a bigger pattern channel, this is the bigger pattern channel here, with a parallel channel added on, shows the path of the future. Okay, keep that in mind. Alright, what's other interests? Oil's pretty important. So let me have a look at oil here. So oil slowed down a bit because it hit resistance. That's a supply point. Big rally up here. Some say it's going to 100. Hell, it might even get up here, which is geez, that'll be what's that? I think it was 150. That'll be 130 to 140. It might tickle that range area there, so that's like 120 to 140. Who says it wouldn't? Let's have a closer look. If it breaks through that, obviously I'm talking bullish thesis because I believe a lower US dollar is coming. And I would have to say, on the if oil stays above $75, $80 over the next couple of months, you're going to get that stagflation. Okay, and that's why anti-US dollar trades are going to do very well, because stagflation is not a reinflation, it's higher prices over a slower economy. So when you get real stagflation, the Fed prints like mad. It's a never-ending loop. So oil breaks out this resistance point here. The US dollar is obviously moving lower. They've got to keep it down. Can't afford to risk off before the US elections. You get a period of serious stagflation. That's obviously good for silver, gold, and Bitcoin and crypto, so everything can go nuts. So if oil goes higher, fuels inflation in the coming months. Inflation won't be transitory. It'll be sticky high, as they say, and will fuel stagflation fears, and portfolios will adjust. Let's have a look. Next. Alright, just a little close-up of oil here. So, yeah, that's right. We can easily get up to this middle channel line here, and that is what is it? It's obviously around, it's $150 up there, so that's obviously around 130 to 140. So it could get very interesting. Keep an eye on oil. It'll lead the future. I suppose Litecoin. As we can see, this is quite an amazing. I mean, obviously, if you can see a channel like that, you can invest, can't you? See how price is bound by the. This is the lower channel area here. Well, this is probably the main channel along here. Just do that. This is probably the main channel. Boom, boom. And as you can see, price has been bound by the channel. Rally, big sell-off, support, just probably bounce back into what 180, 120. So it's around there. So if we get a rally, I don't know, just like this one over here, I'm saying. Measure the distance between there and there. If we're lucky enough to get a rally on the US dollar, put that there, so that's equal, say, around there. That drags us down to an upper challenge rally close to $400-500 on the US. That's by February, March, April next year. So if the US dollar slumps, we can easily get a rebound. So if you're buying lows at the bottom channel line, that's buying at support. When demand comes in and stagflation sets through, if we get a higher US dollar, higher oil price and lower US dollar, well, you don't know where these trades can go, and these things do move. It's a trend. That's a rally. These things can move. So to say we won't have $500 of Litecoin in the next 6, 8, 9 months if the US dollar falls, why not? One more 20-minute video. So I'll do the Dow, I suppose. Now I believe in an internal private post, Dow 50,000 is on the table. Well, let's say Dow 40 to 50,000, 45 to 50,000, because obviously I'm an investor. I hedge my bets. Why not? So the upper channel line could be the all-time high for a number of years. We get a little bit closer. Right. So we've gone from the Dow seems to move in this blue channel. Okay, I'm just going to magnify that. Put the screen up for you. Hang on a second. Right, okay. See the price swing of the Dow between these blue lines. Rally off the low, supply point here. Rally off the low, supply points. You notice that? Rally off there. See, rally here, slows down. Rally from there, straight through, slows down to this point here. So Dow 45 to 48 up here. We get a lower US dollar down to the 80s, which is the fuel for keeping risk on assets up. Who says it can't get to this range up here? Somewhere between 44 and 48,000, 50,000. Who knows? Because that is the next movement. So that would be benefit for growth stocks. NASDAQ dragging it up. We could have a really crazy blow-off market going from August, gently moving up August, September, because obviously July, August, September and October are the nervous months for investors. And once you get into that end of October into get the Christmas rally, you get the joy in the new year. Everyone gets their bonuses at Christmas time, and may just hang over right into May. So if the fuel is there, Dow 45 to 50,000 is on the table, and it's just another typical move. And obviously that'll be a massive. Imagine that'll be a massive move from 20,000 to 45,000. Geez, that'd be huge. Anyway, the channels tell the story. A lower US dollar would give a fantastic result for risk on assets and help support the Democrats into the midterms, and obviously with the onslaught of the Republicans and their audits and what have you, the Democrats, I believe the leadership, Democrat Party and the Fed's all connected. So there's no independence. Who says there is? So watch out for that type of action going into next year. Not a Democrat or Republican, I'm just talking how the market reacts. Thanks for watching.